Welcome back. Markets still in a very strong spot as far as the bulls are concerned. It's not just that all the indices are up almost 0.8%, the mid cap almost 1%. The advanced declines ratio is also extremely strong, with 3 in the green for one stock in the red. So 75% of the market is better off than it was yesterday. Okay, with that, let's dial back into results and analysis. Weak results from Mastek, as the UK accounts for a bulk of this company's revenues. The 12-month order book declines, while operating income that was reported was a decrease of 8% in rupee terms from year-ago levels. John Owen, Group CEO of Mastek, joins us now. Mr. Owen, for the 9 months ended December 2019, operating income reflects a decrease, a 4% decrease in rupee terms, and 2.7%, of course, in constant currency terms. How do you expect this year to end, the fiscal year, FY20?
Well, I think certainly fiscal 20 wasn't where we planned it to be, and it wasn't. And you're right, we've probably declined 4 or 5%. I would expect, on the back of the clarity we're getting out of our core market of the UK, our growth to sort of, be a lot more robust into fiscal 21. But I think what we have learned in fiscal 20 is we've got our cost structure under control, so that incremental growth should give us better quality of earnings and basically make the company stronger. I think so. The UK I'm very optimistic about. I think the US is flat. It's not broken away from its sort of traditional customers of retailers and its core capability of digital commerce. So we've not had the springboard that we expected from the US. But in fairness, we are putting our transformation plan together under the new leadership, and I'm confident that market will also grow in 21. So I'm optimistic looking into the new calendar year as we go into the new financial year.
Okay, well, Owen, thanks, Mr. Owen, thanks so much for joining us. What kind of constant currency revenue growth can you guide the street for FY21? How does it look?
It's like, I think, when you're coming out of a sort of a restructuring, you're fairly modest and you're cautious. But I would expect us to have quarter-on-quarter sequential growth through the year, and you're talking probably single-digit growth. So I'm not going to give a number at the moment, and I think it would be a little bit, it would be the wrong time, because we've still got the UK to go out of Brexit, which potentially is going to happen this week. We're going to get trade negotiations, we've got an election in the US, but I'm confident, because we are on a low base through fiscal 20, that fiscal 21 will be more robust and we'll be able to deliver improved earnings off a better top line performance.
Okay, well, margins have improved to about 13.8%, which is better even on a quarter-on-quarter basis and as well on a year-on-year basis. What kind of a range do we work with for now, for the coming quarters?
It is, and I think it's like anything. If the market conditions are softer, you look at your cost structure and you have to get leaner. And I think that's what we've done through fiscal 20. And I hope that gives investors confidence that we are managing the business. As the market improves, certainly in the UK, which is our core market, I'd like to think the top line will recover quickly. What we will do is sort of take that margin improvement and reinvest in that growth. I don't think we'll take it to the bottom line, but it's about creating a financial headroom so we can do margin expansion. But I think if the market's growing, we should be investing more and more into our sales and marketing to grow faster. So that's probably the strategy. I won't give guidance on our margin outlook for the year, but I think we've now got a good base to build from, and as the top line starts to recover, that should yield better quality of earnings, which we will reinvest in the business.
So the 12-month order backlog was about 471 crores as on the 31st of December, which was a sharp contraction. But what can we expect it to look like by the end of the fiscal?
By the end of the fiscal year, absolutely. I think what we've had is some linearity because the UK went through a general election, so government effectively closed down for 6 weeks. And we have seen orders sort of move to the right. We've closed orders and, we've started January very well with sort of a deferral of Q3 orders. We expect Q4 to be a really robust and strong performance in orders, and we expect to exit the year with a stronger order book than we probably entered last year with. So on a year-for-year basis, I would expect our 12 months order book at the beginning of fiscal 21 to be stronger than it was at fiscal 20.
All right, that itself is a big incremental positive. Cash equivalents and fair value of mutual funds stands at 435.6 crore rupees or thereabouts. That's on 31st December. How do you plan to utilize this? That's quite a substantial amount of cash.
I think we've always had a very clear strategy when we started at Mastek 3 years ago under Vision 2020, which was fix, win and grow. And we said we would grow organically and we would grow inorganically. And we've tidied up the balance sheet, as you quite rightly said, and taken non-core assets in Majesco, and we've also got some real estate that we are monetising. And that's about building some cash so we can actually acquire organisations that can accelerate our growth. So in simple terms, taking non-strategic assets and putting them into cash generators. So that's the strategy. We've still got to close out on the other 40% of the Majesco investment that should yield some good returns back to Mastek, but we know how to invest it. We've got a very clear business model, and we'll be investing in strengthening the business model so strategically we can generate cash off a bigger platform.
Okay.
Okay, all right, Mr. Owen, thank you for joining us and giving us all of those details. In fact, the stock is now up over 5% post the commentary from the management.
Mid-cap IT has done remarkably well, Sonia. Tata Elxsi, NIIT Tech, Mastek, so many of these stocks. What's also doing well, of course, is the market that is at